Well, welcome to everybody, and I'd really like to thank you for helping to deliver what's been a very good performance for the group in the 6 months to March 2013. If I just give you a couple of highlights in terms of our financial performance, we've delivered revenues up 11% in the period, operating profits up 14%, headline earnings per share up 31%, and the board approved an increase in our dividend of 20% this year to 96 cents. That really represents a fantastic achievement and is a credit to all of our employees worldwide, because I think in today's tough economic environment, many companies are delivering results which are down year on year, and in that context, Barloworld has again delivered a fantastic performance in the 6 months. I guess in terms of the major highlights in the 6-month period, probably the most significant achievement has been the results of our automotive and logistics division, which on the back of 15% growth in revenues produced some 27% increase in operating profits. And that was a strong performance all round. The motor retail business performed very well in both Southern Africa and Australia. The car rental business delivered a very good performance in the period. Avis Fleet Services had profits up 44% on the back of some recently won contracts and some good growth from existing contracts. And we continue the turnaround in our logistics business, and we've also made some nice niche acquisitions there, the most important of which was the formation of Barloworld Transport Solutions through a merger of our DTS business and Manline Logistics. I think we also delivered a good result under quite difficult circumstances in our equipment Southern Africa business. As many of you know from what you've read in the papers, the mining industry is going through some difficulty. But in spite of that, we delivered an operating profit performance that was just marginally down on the prior period. And this obviously included the benefits of the recently acquired Bucyrus business, which came into our results for the first time. In Russia, we produced a solid performance. We also acquired the Bucyrus business in Russia in the period for 420 million. So that'll start to kick in the back half. And the overall performance and project pipeline in Russia is looking very solid. The Iberian business showed a nice turnaround year on year. This is not because the construction industry in Spain recovered, but we over the last few years undertaken quite significant restructuring of that business, and therefore our year-on-year profit performance was significantly improved. The handling business delivered a solid result in both Europe and Southern Africa, and that overall led to the solid growth in operating profits and the 31% improvement in headline earnings per share for the group. In terms of the outlook for Barloworld going forward, we operate in a macro context of the world economic environment. And I think we're seeing a steady recovery in global economic growth. China's growth has slowed somewhat, and that has led to a decline in demand for commodities and some slip-off in commodity prices. That has underpinned some decline in mining capital spend on a global basis, and that is impacting our business in Southern Africa and to some extent in Russia. But notwithstanding that, we've got offsetting benefits through the Bucyrus transaction, which will stand us in good stead. So I'm confident that we'll deliver a solid result across Southern Africa and Russia over the balance of the financial year. And in Spain, the benefits of the lower cost base will also ensure that we show a solid turnaround from where we were in 2012 to what we deliver in 2013. On the automotive and logistics side, I'm very confident that we will continue with a very strong performance in the second 6 months, continuing some of the solid growth we've seen over the first half. And that'll be underpinned by reasonable growth in new vehicle sales, some good growth in car rental volumes, and a continuing growth in our fleet services business, particularly on the back of some newly won contracts and some important tenders which we're currently busy with. The logistics business will also benefit from the recent acquisitions, which will be in for the full 6 months to come. And I think our handling business also, we're working hard in growing our agriculture business into Mozambique and other parts of Africa. We've got a startup business in Russia, which we're working on. And the handling business has shown a good turnaround in the first 6 months, which should continue in the back 6 months of the financial year. So overall, from a financial perspective, I think we're doing well. Don is managing our debt levels well. We'll bring in working capital and generate strong cash flows in the back half. And on some of our non-financial measures, we're sitting at a level 2 BE rating. We're the top empowered company in the general industrial sector. We've made some good progress in our energy efficiency initiatives and our carbon emissions. We're continuing to invest in skills development, training, talent management, and our stakeholder engagement initiatives are also going from strength to strength and now sit under an executive director in Isaac Shongwe. So overall, I think your company is in good hands. We, despite some challenges in the external environment, have delivered a fantastic result in the first 6 months, and I think you're going to see a very solid performance in the back 6 months. Thank you for your contribution over this financial year, and I look forward to you going and taking the business from strength to strength in the back half. Thank you very much.